Hello. We know that a U.S. company is generally subject to corporate income tax at the federal level. It is usually also subject to income taxes at the state level as well. For such double taxation situations, we normally would simply list those jurisdictions in the input file into the B2T engine, and the engine would do the tax calculation automatically for each of the listed jurisdictions. However, for U.S. states, the taxable income is apportioned from the federal level taxable income. So the engine also needs to know the apportionment rate. So let's see what happens if we simply list those jurisdictions. So we're going to go to a simple example. Our US company P that has a revenue of $1,000 and we want to calculate taxes for it. Now let's suppose that the P is also subject to the state level taxes at Pennsylvania and New Jersey. So in the setup for the company P, we're going to enter additional jurisdictions. USA, PA, comma, USA space NJ. And we're going to save it. And we're going to go to the easy button to submit it for calculation. If the engine happens to start code, it may take a few seconds to warm up. Otherwise, it'll be rather quick. We got an error message here. Essentially, the error simply says, please specify the apportionment rate. So, okay. So let's specify the apportionment rate. The apportionment rate changes quarter by quarter, so it is recurring input. So here, we're going to enter those records that contains apportionment rate information. So here, we have the apportionment rate data here. So the record here simply says, Company P's Pennsylvania income is apportioned from P's USA taxable income at the rate of 10%, essentially. And P's New Jersey income is apportioned from USA income at a rate of 20%. So we're going to save that file with the apportionment rate information entered, and we're going to submit to the B2T engine again. Submit. So the calculation is down. Let's open the output file. Now we see the calculation for New Jersey and Pennsylvania. They are calculated successfully, and the taxable income now it's a 20% from 1,000 and 10% from 1,000. So we see the calculation was successful. Now let's take a look at the federal level, the USA jurisdiction taxation on P. $1,000 income, and we know that U.S. corporate income tax rate is 21%. Why this strange number here? So let's go to the provision sheet for that calculation to take a detailed look. We use a shortcut to go to that sheet. Shortcut, so that's the sheet. And we're going to looking for the current tax expense calculation, CTE Calc report, and the current tax expense calculation for P and USA. And we go down here, we see the income starts with 1,000. And now we also see the deductible taxes from New Jersey and Pennsylvania, which reduces the 1,000 to the taxable income currently at a smaller amount. So therefore, the tax amount is smaller. So we see here that the engine not only has a race to calculate the state level taxes, it also has rules that says the state level taxes are deductible for federal level tax calculation purposes. And the engine applies the rule automatically here. So to summarize, For U.S. companies that are also subject to state level taxes, we need to list those states for the company and list every single states that the company has to pay taxes to. And we also need to enter the apportionment rate for the company and for each of the states. The engine will then does a calculation automatically for each of the states, like here, and it will also apply the rule that state taxes is deductible for federal tax purposes. That's it. Thanks for watching.